Online casino and sports gambling company Rush Street Interactive. Yep, Rush Street. We know about that place, right? In Chicago, going public through a merger with DMY Technology Group, a special purpose acquisition company. Also known as blank check companies, investors put money into the SPACs without knowing how or when the capital will be deployed. Notable SPAC deals including Nikola, you might recall, Richard Branson's Virgin Galactic, and fellow sports betting company DraftKings that I have a little experience with. Shares of DMY, I'll take a quick look at that because upon closing, Rush Street Interactive will become a publicly listed company on the New York Stock Exchange under the ticker RSI. Joining us now is Greg Carlin, co-founder and CEO of Rush Street Interactive. I wonder if you... Good time to do it, given that MLB is back, Greg. I'm excited about Rush Street because I just like online gaming, but I thought I might recuse myself because of DraftKings, and I do give them some business. And I looked up I've put on 24 bets in recent nights, but then I looked it up. It's been 6 days, so that's only 4 per day. So I don't think I have a problem yet. But I think baseball on Thursday, the Yankees Nationals was the biggest betting ever on a baseball game. So it's a good time for you to do this, I think.
It is indeed. Actually, we had a huge weekend with Major League Baseball restarting. Roughly 2/3 of our handle was baseball this weekend. And I know, Joe, that you like DraftKings, and I'm hoping maybe I'll convince you to give us a try as well. We operate the Play Sugar House Sportsbook in New Jersey. So
yeah, I know. And you think you have I noticed that you claim to have a broader array of things to offer than DraftKings, but you're a fraction of the size, at least in terms of market cap, even after the SPAC. You're just under $2 billion. I think DraftKings is $13 billion or something. So you've got a lot of growth perhaps ahead of you.
We do indeed. And if you look at our multiple to revenue, actually, our enterprise value revenue, we traded a significant discount to DraftKings based on the stock price this morning. And we're growing really fast. I mean, these past 4 quarters, we've seen growth of over 55%.
So what are your plans and where are you operating now? I know Pennsylvania.
Sure.
Just tell me exactly what we can do on Rush Street, where you are right now. And it has to do with some casinos in Illinois, too?
Well, so we have 2 companies, Rush Street Interactive, which is our online business, and Rush Street Gaming, which is our bricks and mortar casino company. But Rush Street Interactive is currently operating in 5 states. We're in Pennsylvania with a casino and a sportsbook, New Jersey with a casino and a sportsbook, Colorado, Indiana, and we'll be launching in Michigan in next year, Virginia next year. And we're also operating in Colombia in South America, actually, both sportsbook and casino.
Okay, so and across the board you have, I guess, casino. I'm not going to try those. That's the last thing I need is to start playing blackjack online. But you have
actually online casinos. Actually, I know sports betting gets a lot of attention, but online casinos actually a bigger market and a broader demographic than just sports betting.
Greg, that's trouble. That's trouble.
Oh, well, then you should stick to sports betting.
I think I needed to stick to. So what the pent-up demand has been apparent since last. I mean, I bet on an exhibition game, if you can believe that. But the pent-up demand has been apparent since MLB got back in business, right? What are the next big things coming? I know NBA is going to be big.
Well, yeah, NBA is starting I think on Thursday is the plan, and obviously, the NFL they're starting with their training camp, so we're excited for that. We do think the sports, big league sports ramping is going to be great for our business for sure. But our company, we're actually we do more revenue on the casino side, so we've been less impacted by the shutdown.
Why
of sports.
SPAC it, Greg? Why go there?
Well, no, that's a good question. When we decided to raise some outside capital, we considered a bunch of different options. But when it came to make a decision at the end of the day, there was a few things that were important to us. One, certainty to getting a deal closed. If you look at the IPO market back in April when we were starting to think about this, it was kind of dicey, and the IPO market's very cyclical. So we thought this would be more certain. 2, the sponsors that we connected with. Niccolo Damasio, they're great guys, and they've been really great to work with. And not only that, but they've agreed to subject a lot of their shares to an earnout, which aligns our interests better. Also, we've got more transparency. Our story is really a growth story. We're looking to grow the business over 50% between this year and next year, and we have more flexibility to talk about that with the SPAC process. And lastly, we're raising a PIPE as part of this deal, $160 million, and Fidelity is leading that. and that's actually makes the transaction cheaper for us. So it's actually a good deal all around.